Yo, what's up traders? Tyler here. Today I'm going to show you the top macro charts that I like to look at to determine where capital is flowing around the world. But before I do that, let me introduce you to our brand new Value Ventures newsletter. All right, so if you head on over to the link in the description, it's going to be down below in the video, you're going to see a link to this, and it's going to describe all about our new guy, Mr. Bean's value investing letter. And we talked about this checklist I've been telling you guys to go over and get. Well, now he's launching a full out service for us. It's going to be a newsletter you get every single month. It's going to talk about his thoughts on how to value invest, the stocks that he's looking at. And then from there, you're going to get a free special presentation on spin-off investing. And that's a really cool thing. It's a free mini crash course. So if you're interested in value stocks, if you're interested in really diving deep into fundamentals, you definitely want to check this out. Okay, so now let's get into it. I'm going to break down the charts into a couple different categories. We're going to do equity indices, we're going to do bonds, we're going to do FX, we're going to do volatility, we're going to do crypto, we're going to do sector ETFs. I'm going to show you each tickers that I look at in this watch list. And this watch list is something that never changes. So these are the main things I like to have up no matter what's going on in the market. They never come off, never go on. That's because these are the most liquid things in the world and the most important instruments to watch. So let's get into it. All right, so let's start with equity index. Now, the equity index is the most important thing. You're going to see it all around CNBC when it goes down. People freak out about it, and that's because people have most of their stuff in stocks, right? So when those go down, people freak out. When they just go up, people get euphoric. So obviously, this is the thing that we need to watch the most. Now, the ES futures are the S&P 500 futures, and these are the most liquid things in the world. They lead the market. They trade almost every single day of the week except Saturday, and that's ES1 exclamation point on the TradingView platform. This is something I definitely watch a lot. This is, if you're going to watch one thing in the market, it's these things right here, the ES mini futures. Then following that, we got the NASDAQ futures, the Dow futures, and the Russell futures, which are all equity index futures. And, they just represent different indices. NASDAQ's tech, Dow is, 30 Dow stocks, Russell small caps. And so they do move pretty closely to the ES, but I do like to keep track of them and see if there's any disparities going on. Then from there, you get down to the equity ETFs, SPY, IWM, QQQ, DIA, and these things are essentially the equity form of the futures. So if you only trade equities and you're not trading futures, those are important to watch. But in general, the futures are going to lead all of the action in the market, so definitely watch the futures. You're not going to see SPY trading on Sunday night gap down. You will see the E-mini S&P 500 futures going. And that's about it as far as equity index futures. Now I want to move on to bonds. Boom. So bonds are extremely important. They're controlling interest rates around the world. Interest rates affect everything from the valuation of stocks to what we can get on mortgages, car loans, etc. So you have to be watching this here at Macro Trader. Now, the most important contract is the ZB1 exclamation point, and that's the 30-year T-bond future. The 30-year T-bond future gauges the interest rate 30 years out on the U.S. government securities, so extremely important to watch. The higher these things go, the lower interest rates go. And typically these rally when investors get scared. So that's why I like to watch them. I also look at the 10-year, which is very similar, the 5-year, and the 2-year. So this is all different points in the curve, and you can see them move. And then euro dollars. AK talked about euro dollars in one of his Real Vision videos, and these are essentially under 2 years. You can get more granular and look at, the 2-year to 0-year time frame. On top of that, I also look at the ETFs. We got IEI, which is the iShares 3 to 7 year Treasury bond ETF. These are the equity forms of the futures. So if you don't trade futures, this is what you're going to be watching. And then HYG and JNK are also very critical. These are track high yield bond prices. So these are the more riskier bonds, the stuff that corporates issue. And when markets are going to risk off, you're going to see these start to tank. So that's why I always like to watch these to see where they're going. If they're in a downtrend, that spells bad news for markets. And then IEF, TLT, these are just more ETF versions of the futures that I talked about up top. Now, another interesting thing that I like to track is SHY over HYG. And essentially, this is the spread between government bonds and corporate bonds. And the wider the spread gets, the more scared investors are of the market. So if you look back here, you can see in 2008, this spread ripped to the upside. That means bad news was happening. When the oil crashed, we had the same little spread. We had that mini crashing of 2018, the spread widened as well. So I like to keep this up and see, if the market's falling and the spreads aren't widening out, then that doesn't mean that there's actual fear in the market, that the market's going to snap back. Similar to how we've been doing. Like if you look at this little rally right here, we fell big in the market, but the spreads barely widened, so you can kind of fade the move. And so far, it's turning out to be a good fade, right? The market's been ripping up. And then if you want to see the interest rate level instead of the bond price, remember when bonds go up, interest rates go down, you have things like TYX, TNX, and DGS2. These tickers vary depending on the trading platform you're on, but I keep track of these to see where interest rates are. And you can see on the TYX 30-year, we're pretty much nearing an all-time low. So pretty crazy times. Interest rates are going down to all-time lows again. Here's the 10-year. Here's the 2-year, which we're not at all-time lows yet, but we've been falling pretty hard. And so those are the things I like to look at on the interest rate side. Next is the volatility indices, and everyone knows the most famous volatility index of them all, the VIX. Now the VIX represents 30-day volatility on S&P 500 options. And so this is basically the bellwether volatility index. The higher it goes, the more expensive option prices are. The lower it goes, the cheaper options are. And almost all options follow the VIX. So the individual stock options that make up the S&P, sure, they all have their own movements. But if VIX is at 36, the vol on all of the individual equity options is going to be higher. So that's why you definitely want to keep track of the VIX. The VIX 3M is another important indice to look at. That one is the 3-month implied volatility of the S&P 500 options. And I like to look at that one so we can develop some sort of a term structure between 1 month and 3 month. Now, if we plot that spread, VIX over VIX 3M, you can see here we have basically a steepness of the term structure. And why I like this is because this tells me when to start getting long volatility and when to short. And we typically want to get long volatility when this spread goes above 1, and especially above 1.1, which is why I have this little line here. You can see in the big sell-off in 2018, we had a nice signal, another nice signal here, another nice signal here, and then we had a couple false breaks. You know, this one perched above and came back below. And on these trades, I typically stop out really quickly. But this is an extremely important chart. And if I can zoom back here, let's see, get to 2008. Boom, on 2008, you can see how much this spread blew out, went to the 130s, 140s, 150s. And this is when you can make buku bucks on long volatility trades. So this is definitely something to keep track of. Next one I want to show you guys is the VXX. Now the VXX is essentially a equity fund that lets you trade the VIX futures. And it goes up when volatility goes up, it goes down when volatility goes down. Very convenient. It's not a great long-term hold, but to do the little moves, it's definitely a good one to have. UVXY is just a more leveraged portion of VXX. It's a different style. And if you want even more action, go to UVXY. These other ones I don't want to go over in the video. They're not as important. But as long as you get those first ones that I talked about, then that will definitely help you in the volatility space. Alrighty, next up, crypto. And this is everyone's favorites recently. And crypto, you know, it's becoming a big macro instrument now because Bitcoin tends to rally when people get scared of central banks and people get scared of, you know, what's everyone doing with this money printing and government stability around the world. So I think for any macro trader now, you have to have at least a chart of BTC USD up and track that. It's similar to a gold nowadays. If you want to get into the other ones like Bitcoin Cash, Ethereum, Litecoin, you know, I'm not a huge crypto dude. I'm more of a buy and hold guy in this space. I think there's going to be something to it, but I don't want to try to guess which ones are eventually going to win. But for sure, definitely be keeping BTC USD, the Bitcoin price up, because that's a very important one. And plus, it's an easy trader. If you guys listen to Chris goes into this and crushes the shit out of this market. He destroys this. It's very easy trader if you're a good systems trader. So definitely have that one on watch. All right, next category is FX. And you would not be a macro trader if you didn't at least watch FX. Now, I'm not big into currencies personally, but here's the big majors that you're going to want to watch. And all of these are on the CME contracts that trade the different Forex pairs. So I'm not looking at the spot prices, I'm looking at the actual futures prices on these. And that's because when I tend to trade Forex, I go into the futures, I don't trade spot. People are different, Chris is different. You'll hear more about that if you're more interested in FX. I'm just going to tell you what I watch to get a general gist of where things are going. We got the 6A, which is the Aussie, the 6B, which is the pound, the 6C, which is the Canadian USD crosspair, the DX, which is basically a dollar index. Then you got the euro, the yen, and those are the most important. Now these other ones, 6L, this is the Brazilian real. I watch it once in a while. I will keep an eye on the peso. I will keep an eye on the New Zealand dollars and then the Swissy. But that's about it. Again, I'm not a huge FX trader, but if you keep track of those main indices, again, all these sixes in front of here stand for the futures contract, not the spot, and that will clue you into where things are going in the market. Next up for the macro watch list is metals, and of course, if you're trading macro, you gotta have a chart of gold up. I mean, it's just a key macro trader, and essentially acts as another fear barometer when people are getting scared about central bank policy and money printing and inflation and government stability. They're going to be getting long gold, and when they're more confident in stuff, they're going to be short in gold. So, even though a lot of people don't believe in it, I know Buffett doesn't care about gold, and he's like, oh, invest all your money in stocks, but it's very, very critical to keep this on the chart. It's a great macro trader and something that can make you a ton of money the long side if people get very scared. Apart from that, I'll watch silver once in a while, and the future is SI1, the ETF is SLV. I watch those. But silver mainly tracks gold, and gold's good enough for me. The other ones, platinum, palladium, copper, really no need to be checking those. They don't move that much, and they're kind of esoteric markets. If you're a systems trader and you're hardcore, maybe watch them, but if you're a general macro trader, there's really no need to keep tabs on them. All right, and finally, we got these sector ETFs, and these are very important to watch to kind of get, put your finger up to the wind and feel where the breeze is blowing. These things help you use sector ETFs to figure out where the market was going all of the time. And let me pull up a few little things for you guys here. I got a slide from Stevie Cohen. They taught you that 40% of a stock's price movement was due to the market, 30% to the sector, and only 30% to the stock itself, which is something I believe is true. I don't know if the percentage is exactly correct, but conceptually the idea makes sense. So you can see here that Stevie Cohen pays attention to sectors. I think they make a lot of sense, and this graphic illustrates why. So you can kind of time the cycle if you know which sectors are running and which aren't. So in the early part of the cycle, you got financials, real estate, consumer discretionary, info technology, industrials. Those are going to be running. Things like consumer staples, healthcare, energy, telecom, utilities. Those in the early cycle are not going to be that hot. And then as we move later and later into the cycle, people start to get a little more defensive. So if you look over here, when staples is getting bid up, healthcare, energy, and utilities, that's when the market's about to go in recession, and people stop plowing into tech stuff and consumer discretionary stocks. So if you can see that and look at those in the charts, you can get a good idea of where we possibly are in the cycle. So that's why I have all of these sector ETFs up here. IBB is the biotech one. You can see it really hasn't been too hot since 2014. GDX is gold miners, which again is really just another graph of gold, but I have it up here just to keep tabs. XLI, you got the Spider Sector Trust Industrials, and they've been pretty much going sideways. Then a bunch of other ones. IYR is the real estate I like to look at. I like to look at the healthcare stuff. We got the industrial real estate ETF here. XLB, XLK, which is the technology sector. You guys can see this has been ripping. And actually, judging by this chart, since technology has been so strong, it wouldn't really suggest that we're at the end of a cycle here, since people keep on plowing money into that. And the list goes on and on. So you can see we have the energy ETF, here's utilities, here is consumer staples. And so these are all very useful to have up on your watch list. And just really quickly, before I end this presentation, I want to point out to you guys a very interesting chart I found. This is XOP, which is the oil and gas ETF. And you can see that we might actually make a new monthly closing low on this thing since '08. So I think this is one of the most interesting charts in the market right now. It suggests that, something in oil and gas space definitely isn't right. Literally since the inception of this ETF, no one has made money. I mean, talk about dead money trades. So I think that's really interesting. But anyway, guys, I hope that helped you out a lot. If you like this, just hit me up in the comments, and I can email you or send you guys some of these ticker lists, and it can help you out. But really, you want to build your own, what suits for you. I put up a suggested thing. I think that's a good place to start. But depending on the kind of trader you are, you're going to want to tinker with that. You're going to move things here, move things there. Maybe you don't want to watch bonds. Maybe you only want to watch different stocks. Maybe you don't want to watch any of this stuff at all, and you like to just look at hot stocks. But either way, I suggest getting a set watch list that you always have, and you can always tune into, and that way when money's flowing through the markets, you really have your pulse on what's going on. Finally, guys, before you go, make sure you check out the Value Ventures newsletter by Mr. Bean, our resident value investor. And honestly, if you're interested in looking for fundamentals and looking to get beefed up on those chops, Mr. Bean is the guy to go to. He's an absolute badass at this stuff. He knows way more than I do about company fundamentals. And if you want to get really into the weeds, check out his newsletter. And that's it for the video, guys. Please subscribe, hit the subscribe button, hit the bell and everything. I'm glad to do this video for you. Hit me up in the comments. I'll respond. I'll help you guys out, and I'll see you next time.